Oil technical analysis, November 23rd, FXEmpire.com. The light sweet crude market, as you can see, bounced from the Monday hammer that formed at 95 and has triggered buy orders if you played the hammer from a break at the top. The market does look like it wants to go back up to the 105 level, or 103-ish to 105 level, but the $100 mark could still remain as somewhat resistive as a psychological barrier. The trend is still up, but a weaker than expected GDP report out of America could possibly pressure prices downward. However, as long as we're above 95, we feel that this is a buy on the dips type of market. Remember, the light sweet crude is a fuel that's used more in the States than in other parts of the world, so it will be directly correlated with the economy in the United States quite a bit more substantially than, say, the Brent markets. And speaking of those Brent markets, they had a pretty smashing day on Tuesday as the 105 level has most certainly held as support at this point, and it does look like we're going to bang around in the previous resistance and supply areas. We think that 112.50 is probably given at this point, and 115 could be the high end of this range. Expect trading to be choppy, and with the U.S. shortened week ending at the end of the day here Wednesday, we think that this would be a very illiquid market, so it could have some strange volatility in it. But overall, it should stay constrained within these price ranges. If we get above or below 105, we would at that point have to be bearish of this market. But until we see that, we just have to assume that the consolidation and the uptrend continues.